Amazon has turned on their jets towards profitability up to the max, and I think that is what is sending shares higher, nearly 7% in the after hours. Hey guys, hope you're doing well out there. Time to take a look at Amazon.com after they reported their Q4 results. We'll take a look at the revenues, the earnings, some news that came out from Amazon's report, and then take a look at the different segments, their e-commerce, AWS, the all-important cloud business, take a look at the cash flows, balance sheet, and statement of income, and then take a look at it from a chart perspective. This one is looking like it wants to break above its all-time highs back over $170, $180 a share. We'll see whether it can do that, and then where you can come in here and be a buyer in shares of Amazon for the long term. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. We are on the road to 1,000 subscribers, and your support would mean a lot. Shares of Amazon up nearly 7%, all the way up to $170. This one's market cap now over a $1.6 trillion. That includes a 50% rally over the past 1 year in shares of Amazon. Now, their Q4 revenues, which is the holiday season, so keep in mind these numbers are going to look extremely strong because the holiday season is naturally just quite strong at Amazon, and this one was no different. In fact, record revenues of $170 billion, good for 14% growth year over year, beating Wall Street estimates by over $3.7 billion, and then EPS coming in at $1. That is not comparable to consensus estimates of 80 cents, likely due to a pre-tax valuation loss from their Rivian investment of right around $100 million. So revenues coming in very strong, good for 14% growth. They posted their different segment sales. We'll jump into that in just a second. But first of all, in terms of guidance, net sales are expected to come in between $138 and $143.5 billion. This is for the current first quarter of 2024 that we are in. And consensus estimates were closer to 142.17, so right around the midpoint of Amazon's guidance. That would be growth of right around 10% if you take the midpoint. So Amazon not really raising their guidance, but coming in right in line with estimates on Wall Street, not really surprising either way. Now, operating income coming in, or is expected to come in between 8 to 12 billion. That would compare to just 4.8 billion in the first quarter of 2023. And this really is the story over at Amazon. This company is becoming an absolutely cash flowing juggernaut, an absolute profit machine, both on the operating and net income side. And that is the story over at Amazon. That is why the tails are turning. That is why, honestly, in my opinion, the stock is up nearly 7%. This company is just now turning on the jets to profitability in a massive way, and that's really shining through. In terms of guidance for the next few quarters, in terms of revenue, they're expected to post roughly between that 10 to 12% growth on top line, really for the next, you can call it 8 quarters. Wall Street has it. The analysts sort of trickle down as we head along, but really you can expect this one to grow in that low double digits for the next foreseeable future, at least on that top line. And then in the bottom line, as we said, profitability just exploding in this most recent quarter, and then also expected to continue rapidly rising next quarter and then slow down in Q2 and beyond. And that slowdown is coming down to 35% growth on that bottom line. So still fantastic growth expected over at Amazon really throughout 2024 and beyond. This one has the top line sales to really justify a big valuation, but for the longest time it never made money. It was always a money loser. Now with Andy Jassy at the helms of Amazon, with profitability on his mind, he is turning on the jets towards making bottom line money for Amazon and then distributing that to shareholders. Now in this most recent quarterly earnings, Amazon announced Rufus, now a online helper, basically makes shopping online even easier. So Amazon announced Rufus, which I'm not sure who came up with this name Rufus, but in my opinion, I don't really know what I feel about this name, but that is being launched in beta on Thursday to a small subset of customers on the Amazon mobile app, and then progressively rolling out in the next few weeks. And that is just one of the latest applications of Gen AI in the Amazon platform that includes drone deliveries. Check out free Amazon Go stores. And I'm not going to say this because I have one of these devices sitting right about 2 feet away from me, and it will go off if I say the name, so I won't be saying that. But I think Rufus, in the next foreseeable future, it probably will take some time, but in my opinion, I think this is a fantastic move by Amazon. Really will take some time to reflect on Amazon's top and really bottom line, but I think down the line, this can become a household name, just like this device has become, the smart device over at Amazon has become. And I think AI embedded into smart shopping and really Amazon search will not only just help their e-commerce business from a shopping perspective, but also has the massive ability to help their advertising business, which in my opinion is the next growth lever after AWS over at Amazon. Now, from a segment basis, we have our e-commerce from North America sales up 13% year over year, crossing the $100 billion mark, over $105 billion. Keep in mind, this is for 3 months. This company posting just $100 billion of top line sales in 3 months only in North America. The top line numbers over at Amazon are just like mind blowing. It's hard to wrap your head around such a large top line sales number, still growing at 13%. And like we said, the operating income jets just starting to be fired over at Amazon. Last year at the same time, they were actually losing $240 million off of $93 billion worth of top line revenue. Now they're generating nearly $6.4 billion in operating income. Again, that is off $105 billion worth of top line net sales. And then trailing 12 months, posting roughly $350 billion of net sales and nearly $15 billion of operating income. This is basically as steady as it gets when it comes to rapidly rising operating incomes. From an international perspective, similar story, not exactly the same. Sales growing at a faster clip, 17% year over year, up to $40 billion. And then operating loss, seems like their Q4, they do tend to take a larger operating loss on that international segment side. But even then, last year you were sitting at a $2.2 billion operating loss. That is now down 81%, just at a operating loss of $419 million. So trending in the right direction, still has a ways to go to become profitable, but I think Amazon will no doubt get their international e-commerce side of the business into a profitability standpoint from, again, just an operating basis. From a net income basis, this business still probably losing a fair amount of money, but you want to see it turn to operating profitability. Last but not least, the all-important AWS, the largest cloud provider, coming in with $24 billion of revenue. That was good for 13% growth year over year on that top line for AWS. I think expectations were somewhere around 11%. And so AWS coming in ahead of Wall Street expectations on that top line number. And like we see with their North America e-commerce profitability just ramping. Last year, you were at $5.2 billion worth of operating income. That climbed 38% year over year, now up to $7.16 billion of operating income. They're posting roughly $25 billion worth of operating income just from the AWS business alone over the last 12 months. And I'm really excited to see where this goes over the next 2 to 3 years. Really, AWS profitability will continue to, in my opinion, climb in a pretty substantial way. And this graph basically paints the story over at Amazon. Free cash flow turning from a loss of nearly $12 billion, now climbing to close to $36 billion. Keep in mind, this is for trailing 12 months. So over the last 12 months, not just this quarter, but still $36.8 billion of free cash flow. That is absolutely spectacular. Their long-term goal remains in optimizing free cash flow. And I think Amazon is doing a fantastic job at meeting their long-term goal. In terms of their financial statements, Amazon kicks things off with their statement of cash flows. And honestly, if my statement of cash flows looked this good, I too would kick things off with the cash flows. Now, they start off by giving you their cash and cash equivalents at the beginning of the period. And so we have 2022 on the left-hand side, 3 months ended 2023 right here in the middle. And so Amazon starting off the quarter with roughly $50 billion worth of cash and cash equivalents, and then posting $10.6 billion worth of worth of net income. Last year, you were just at $270 million. So really not even comparable on a year over year. This company just absolutely ramping up operating profitability. You then get to add on a lot of depreciation and amortization of those Amazon warehouses. That is a non-cash expense. So you get to bring that back onto your cash flows. You get net cash provided by operating activities at $42.5 billion in just the last 3 months. Then they invest back into those warehouses, into making probably those warehouses more automated, probably a good thing over at Amazon, in my opinion. And then paying back roughly $6.3 billion worth of short-term debt. And so Amazon not really spending a ton of their operating cash flows, spend roughly 12.6 in investing activities and then another 6.7 in financing activities. And so that gets them to add on nearly $23.8 billion onto their already fat stack of cash. And so they ended the quarter with roughly $73.8 billion worth of cash and cash equivalents. This company really hasn't made a ton of money. You see, really has only becoming profitable over the past few quarters, and they're still sitting on a massive pile of cash nearly $73 billion. And we know the FTC blocked Amazon's acquisition of Roomba Technologies, which was just iRobot Technologies. That was roughly a $1.7 billion acquisition for a company worth nearly $1.7 trillion. And so I think the challenge for Amazon really lies right here. What do they do with this cash? How do they spend this cash? Certainly they can't go and do M&As in this environment. Really, any acquisition the FTC will look to block, just because Amazon is so fantastic at wrapping those businesses into their own existing businesses. And so since they can't go ahead and do M&As, they really didn't buy back stock in this most recent quarter. They bought back roughly $6 billion worth of stock over in 2022, but as the stock has rallied, they haven't looked to buy back their stock, not really paying back a whole lot of debt. That payback of debt has slowed down, and so they just are sitting on so much cash that they really, in my opinion, don't know what to do with. And certainly you still have inflation that is devaluing this cash every day. And so in my opinion, I think Amazon, while they can continue to invest in themselves as they have, I think at some point that will just be difficult to do. It'll just be difficult to spend such a big chunk of cash. And so maybe they go down the route that Meta just went down today, and that is start paying out a dividend. Not sure if that's something Amazon is considering, but I guess something they could consider, just sitting on how much cash they have and not really allowed to do any M&As. Now, in terms of their statement of operations, we have total net sales coming in at roughly $170 billion. Cost of sales increasing just a little bit, up from 85.6 up to 92.5 billion. And then fulfillment ticking up a little bit, technology ticking up just a little bit, sales and marketing, and then G&A both controlled extremely well. And so your operating expenses not climbing as nearly as fast as your net sales, resulting in your operating income nearly 7xing. That is incredible. Up from 2.7 billion now up to 13.2. And so you have come down to net income, these two black lines representing your net income, coming in at $10.6 billion. Again, last year you were less than $300 million. And so your diluted EPS not comparable, from 3 cents up to $1. The profitability, like we've said, absolutely exploding. Your diluted shares not really going down, as Amazon, we saw, didn't do a buyback in this most recent quarter, really hasn't done a buyback all year. But again, your weighted shares outstanding not really ticking up all too much at the same time. From a balance sheet perspective, all things looking good over at Amazon. Really nothing to worry about, sitting on, like we said, $73 billion worth of cash. That is up close to $20 billion from same time last year. You have a ton of property, plant, and equipment, roughly $200 billion worth of property and equipment over at Amazon. Not a whole lot of liabilities. They do have a decent amount of long-term debt, sitting roughly at 58, but you see year over year that is ticking down. They do have these lease liabilities also coming in at 77, but I think Amazon well positioned with a ton of cash, making a lot of free cash flow at this point. Also, that the balance sheet is looking in a pretty good condition, in my opinion. And now moving on to the stock chart, this one is looking to break out just above its all-time highs. I have the feeling that Amazon can look to rally and basically rally off these results, which are fantastic considering how fast their revenues and net income profitability really is growing. And so over the next few months, I think you can expect Amazon to continue up in this uptrend. Certainly you have moments where it will come down and backtest. So I think there's no reason to come in here and chase this stock. Certainly you will have pretty good pullbacks in shares of Amazon. There's no reason to feel like you've missed this rally. Anytime Amazon comes, backtest this uptrending trend line, I think that is your first level to pull the trigger and really step into shares of Amazon. My favorite spot really would be right here at $144 a share. That does act as a previous set of support, really dating back to 2021. And I think if it does pull back all the way down to the 140s, that is where you would look to buy shares of Amazon. You do have some level of resistance. This one will meet closer to $186 per share, in my opinion. I think that level can be where the stock gets rejected and then heads lower. But really over the next year, I do expect this one to either channel sideways within this range or eventually then break out over these all-time highs and basically do what Meta is doing and just blast over these all-time highs. These results really are fantastic. I think profitability will continue to grow over at Amazon. From a regulatory standpoint, this company is in a challenging spot, really can't use that cash to go out and acquire businesses, but they're doing such a fantastic job of developing technologies in-house, growing organically, that is allowing them to increase their profitability. It really comes down to what Amazon uses that excessive cash pile for. I guess we just have to wait and see. That was my take on Amazon.com. A fantastic quarter. Really, I think setting up for a fantastic 2024 as well. This one, I think you can step into really any major pullbacks, as we said, down to the 150s, 145s. That is your first level to pick up shares in Amazon. Let me know your thoughts on this one in the comment section below, whether you are coming in here and picking up shares of Amazon at $170 per share. As always, thanks so much for listening, and I'll catch you guys in the next video.